at the end. Okay, so I'm recording this. Okay, hi guys. Once again, thank you so much for taking the time out on a Monday evening to join me for this boot camp. My name is Desiree Gibbs. Oh, Desiree Gibbs is my maiden name. Sorry, I've been married for almost 20 years. I don't even know why that came up. But anyway, so this is the Business Beauty Financial Bootcamp 2. Last week we had one where we talked about setting up your business structure, amongst other things. Now today we are going to, and I think I said this last week, but I'm going to say it again this week. I always say that cosmetology school forgot to include a business class in its curriculum. And I say that because there are so many people who start a business without having a single clue as to what to do to get started. They know their craft, they know exactly what needs to be done behind the chair. But when it comes to actually, starting the business on the right foot and everything that you need to do for your business as outside of operations, they don't have any idea what to do. It's really confusing because there are so many different steps that need to be taken, both on the federal level and on the state level. And what makes it confusing even more is that on the state level, depending upon what state you are, things are tremendously different. Federal is pretty much the same across the board. And beauty school didn't teach us anything about, the business world. Okay, nothing about the business world. And I think it's a bit of a slight to us because we come out completely clueless and we do things all wrong. The hope is that we don't get into trouble with the IRS or with the state before we realize that we're doing things wrong. So what I'm trying to do is I'm trying to bridge that gap between what we should have learned in cosmetology school and what we did not learn. Okay, just on a very basic general level. Okay, I'm just trying to help you to understand the things that you need to do either before you get started, or if you are already a stylist and you've already started and you just want to figure out if you're doing things right, or if you know you're not doing things right, what you need to do to correct what you've been doing so far. So that is the purpose of this boot camp, and it's really I won't say my life's purpose, but I would say that is one of the things that I strive to do as a CPA, former hairstylist turned CPA, is to try to help you understand and navigate this whole business world. Okay, so today we're going to be talking about the new requirements for reporting Cash App, Venmo, and Zelle. Okay, those requirements have changed, and there's so much chatter around because people are not really sure what they're supposed to be doing, how it's going to work, whether or not Cash App is going to give them a 1099K. If they do, what if they give you a 1099K that includes income that is not taxable? Okay, because I know that's going to happen. People they commingle. So some people are probably going to get a 1099K where some of the money, the funds within the 1099K are probably not taxable. So we're going to talk about what you need to do if that happens to you, and just some of the things that we can do to mitigate this, so that way you don't have issues down the road. We're going to talk about worker misclassification. Are you guilty? Are you a salon owner that is misclassifying your workers? This is something that is huge in the beauty industry. And it's not only in the beauty industry that this happens, it also happens in other industries. But what I find is that in other industries, sometimes they do it because they are truly trying to avoid paying employment taxes. Okay, it's cheaper to have a subcontractor than it is to have an employee. With an employee, there are so many other things that you're going to have, or so many other expenses that you're going to have to incur as a salon owner employing an employee, versus having a subcontractor or a booth renter. Then you are avoiding all of those taxes and responsibilities that you are going to be saddled with. So a lot of times in other businesses, they do it intentionally as a way to work around not paying those taxes. In our industry, on the other hand, I wouldn't say that we do it purposely, because it's just the way that our industry is set up. We are set up in a way that conflicts with employee versus independent contractor. So we're going to talk about that today and talk about some of the things that you need to keep in mind when you are hiring somebody or when you're hiring a worker. Now, whether or not you actually pay attention or to what I'll be talking about when it comes to that, at least you know. So worst case scenario, you know what you're doing and if you need to change it. Whether you change it or not, totally different story. We were talking about who should give and receive a 1099. Confusion around that. People say, well, as a salon owner, I've never received a 1099 before. Why am I receiving one now? Should I even receive one? Or as a salon owner, you ask yourself the question, I've never given my landlord a 1099 before. Am I supposed to be giving my landlord a 1099? And if I am, what type of 1099 does my landlord get? Then also we'll talk about what types of tax returns you're supposed to be filing, because as a business owner, there are certain tax returns for the IRS and rather for the feds and for the states and also counties and municipals that you are required to file that you may or may not even realize. Okay. All right. So let's see. So once again, hi, everyone. My name is Desiree Anderson, and I'm a former hairstylist and salon owner for over 20 years. I actually stopped doing hair right after the pandemic. At some point, I've been a CPA for about 10 years. But I continued to do hair because it's something that I really enjoyed. I really enjoy the industry, but I was doing it more on a casual basis. And after the pandemic, I said, that's it. I don't have to do this. And I didn't want to put myself in a position where I could possibly catch COVID. So I just said, you know what? I'm not doing it anymore. That was 2020. It's now 2022. So I haven't really done hair. Well, let me take that back. I've taken one or two clients over the last, months or so, but I've pretty much hung up my blow dryer. Don't do it anymore. So as a hairstylist, I worked as a booth renter, salon suite owner, W-2 employee, independent contractor. I was an educator, excuse me. I was an educator and a platform artist for Root Systems, the makers of Chi and also, BioSilk, silk therapy. And so as a result, I'm very familiar with our industry. I know it from like the back of my hand because I've been in every corner of this industry. And now I'm on the financial side. So I now use my knowledge as a beauty professional to help other beauty professionals from a financial perspective. Okay, so I help beauty pros build confidence and clarity around their business finances, because finances can be challenging on a personal level, let alone on a business level. When you combine personal and business, then it can get doubly as complicated. So I'm here to help on the business side. Okay, so let's start out by talking about the new reporting the new reporting requirements. Okay, so we'll talk about the new versus the old law. But before we do that, let's talk about Cash App. Okay, so Cash App is required to provide a 1099. Venmo must also provide a 1099K. So you should expect to receive a 1099K from Cash App and from Venmo. PayPal already provides 1099Ks, so that's going to continue. It's just a matter of the parameters, the limits. Those have changed. Credit card companies, as you know, you use Square, you use Stripe, you already should receive a 1099K if you hit the parameters. Now, Zelle, on the other hand, Zelle, they say that they don't have to provide a 1099K. So the question is, why? And I've heard so much chatter about people saying, well, Zelle said they don't have to provide a 1099. But the reason why Zelle said they don't have to provide a 1099, people aren't getting the reasoning correct, right? So why is Zelle saying that they don't have to provide a 1099? Well, they're saying that they are not a third party processor, right? Well, you know what? We'll talk about that in a moment. Let me switch slides for now, and I'll come back to that. All right. So the new law versus the old law. During the old law, and that was everything from tax return 2021 prior, you had to have $20,000 total in transactions and over 200 transactions. So it had to be a combination of the two, $20,000 and over 200,000 transactions. It wasn't 20,000 or 200, it was and. So if you did not receive a 1099, this could be the reason why, all right? Now, the new law is saying that moving forward, anything over $600, you are required to receive a 1099K, period, the end. Now, this is something that has been required for years for, for example, if you hire an accountant like myself, or you hire a consultant or whomever, or if you're a booth renter and you are working in a salon, anyone that you pay over $600, you were always required to provide them a 1099. The difference, there was a difference between what we were required to do versus what third-party providers were required to do. Now that has changed. Everybody is at that same $600 threshold, and the reason is because there are so many gig type jobs now, where in the past, when this rule was initially created, you didn't have a whole lot of, the gig economy wasn't here, right? People just went to work as employees or they were contractors, and that was pretty much it. But over the last couple of years, we have noticed, or not we, but the government has noticed that there were so many gig workers. And what really facilitated this, in my opinion, is PPP. When people who were not paying their taxes on all of their income all of a sudden said, oh, wait a minute, by the way, I also qualify because I actually made this amount of money as an independent contractor. But if you look back at the tax returns, it probably didn't show that they were reporting all their income. So I think a combination of the new gig economy and also what was discovered during the whole PPP loan thing, that the government said, my goodness, we're losing so much money. Okay, let's change this. Let's make these third-party providers responsible for providing these 1099Ks, so that way we can get more, get more of the money that's out there. Now, be ready to provide your employer identification number. Okay, that's going to be needed in order for them to give you a 1099K. Okay, they're going to need an employer ID number from you. So at some point, you're going to be hearing from the Cash Apps and the Venmos requesting your EIN numbers. That's something that PayPal put into place a while ago, because I know when I first had my PayPal account, they didn't ask for any of that. But I think it was about 2 years ago, they required it. They required me to provide them with an EIN number, and I did. I think they even required an SS number and an EIN. I say if they're requiring either or, do not give a social security number. You don't want to do that because you don't want to have your SS number just hanging out there, right? So provide them with an EIN number. If you don't have an EIN number, it's really easy. Just go on to irs.gov, apply for one. You can get it in about 15 minutes or less, okay? So how do we get ahead of this whole problem? Because it's going to be a problem. What's going to wind up happening is when they start issuing out these 1099Ks, you're going to have people say, wait a minute, that was not income. That was that was me paying someone for, reimbursing someone for a meal that we had together, or I sold something to them, a personal item to them, and it really isn't income. So how do we begin to mitigate this eventual problem? Okay, number one, I will say the easiest way to mitigate this, which a lot of people probably are not going to do, but I'm going to say it anyway, is not to commingle funds. So if you have like a PayPal account, or you have I don't think Cash App offers this yet, but I know Venmo offers a business account. So you always want to have a personal and a business account, just like with your regular bank account. Okay, you want to have a bank account that you use for personal and a bank account that you use for business. Same thing when you have a credit card. You want to have a credit card that you use strictly for business and one that you use strictly for personal. Well, keep that same concept going and do the same thing with these third-party apps like Cash App and Venmo. Keep it separate. That's the best way to be able to argue your point. That's, if they have personal personal and business, they're not going to send you a 1099K for the personal side. Okay, if you have a personal account, they will send you a 1099-K for the business. If you decide that you're just going to run everything through Cash App, then you're likely going to get a 1099-K that is going to have both personal and also business. All right, so sign up for both business and personal accounts. Like I said that. Another thing is you want to classify payments as, as amounts paid for something other than goods and services. So when you are classifying your payments, when you're making a payment or you're receiving a payment, or rather, from whomever, you want to make sure that you classify that payment as something other than goods and services. So like for instance, with PayPal, it could just say sending a friend money, right? Or you can classify it as a service or something that you're selling. So you want to make sure you properly classify all of these transactions. And then you want to notate who the payment was sent to. Who do you send the payment to, or who did you receive the payment from? So on both sides, who do you receive it from and who did you send it to? Okay, that's important as well. Then also, what do you do if you receive a 1099-K that includes non-taxable funds? All right, so if you receive a 1099-K that includes non-taxable funds, which is going to happen, here's what you need to do. You're going to exclude the funds when filing your tax return. So let's say you get a 1099-K for a total of $10,000. And when you go back and look at your records and you realize that, oh, 2,000 of that is actually not income, okay? You're going to exclude that from your taxes. So let's say where it says total income, you're only going to pull out $8,000 as part of your taxable income. Now, in doing so, you want to make sure that you're maintaining documentations, providing the funds, proving that the funds are not taxable. Why? Is because if you ever get audited, you're going to need those documents as proof. If you don't have the documentation as proof, I can guarantee you that the IRS is going to reclassify that $2,000 from personal to business, and they're going to make you pay taxes on it. So it's important that you hold on to all of your documentation, receipts, whatever, and always notate, because I used to be an auditor for the Department of Revenue, and one thing that I always used to look for was documentation. Even if something can appear to be personal, if the person documented it in writing and said, or either writing or by typing in and said, this is what this is for, and on this date, I paid a special attention to that, because I was under the assumption that, let's say you're about to get audited. It's a very difficult thing for you to do, to grab all of your receipts and start to try to say, okay, well, let me see what I can write here. What can I write here? People either don't do it because they don't think about it, or they have to sit there and think way too hard. So usually when something is documented either in writing, there's some sort of notation to see, okay, who I gave the money to and what it was for. Usually it's true, because that's something that you did about 2 years ago. Because usually when you get audited, the IRS can audit you within 3 years of your tax return being due, right? But they'll normally audit you around maybe the second year, going into the third year. At that point, you've forgotten everything that happened 2.5 years ago. You barely remember what happened yesterday, right? So if you have that documentation from 2.5 years ago, and it's well documented, I used to say, okay, this looks good, and I will let it go. Okay, so you want to hold on to your documentations for a minimum of 3 years. Why? From 3 years from the due date of the return. So let's say, for example, this is 2022, and we are now in the 2021 tax filing season, right? So 2021 tax return is due April of 2022. So the IRS has 3 years from April of 2022 to audit you. So that's April. Let's say that's 22, 22. So they have until 2025 to audit you. So you want to hold on to those receipts for at least 3 years. If you file an extension and you don't file your return till October, then they have 3 years from October of 2022 to audit you. Now, if you file it late, Or if you never file it, then there is no deadline. They can audit you whenever. If you file it, let's say in December of 2022, which means that you're already late, they have until December, 3 years from then to audit you. And the reason why I say keep it for 3 years and maybe even 7 is because you can get audited up to 6 years. If the IRS suspects fraud of any kind of fraud, they can audit you up to 6 years. If they don't suspect fraud, it's going to be up to 3 years. If they suspect fraud, it's going to be up to 6 years. So you want to hold on to the receipts. I just add an extra year on there just because, right? Just for the heck of it. So keep your receipts that long. And I think there are probably going to be quite a few audits for this particular subject, because the IRS, they know that people are going to be trying to trick them. And I'm quite sure they're going to have a few audits. And when they audit you, it's not necessarily, they're not going to audit you necessarily your entire tax return. Like when I used to be an auditor, I would request, okay, I want to audit your meals and expenses. I want to audit your 1099K income. So if I'm auditing just your 1099K income, that means that I'm going to request everything I need to audit just your 1099K income. I'm not even going to look at all the other stuff. The only reason I would look at all the other stuff was if something unusual piqued my curiosity, then I might dig into something else. But for the most part, I just kept it to what the scope of what we were auditing. So there will be a lot of letters going out saying, okay, well, we want to review, or we want to audit your 1099K income. And if that happens, you want to make sure that you have all of the necessary documentations to support whatever it is that you're claiming. Okay. Now, before we get into misclassifications, let me go back and talk about Venmo. Is it Venmo? Zelle, and why Zelle says that they don't have to provide a 1099. It's because they say that they are not a third-party processor. They say that they are I would say messenger, so to speak. The way that Zelle works is, if I Zelle you money, I'm Zelling you money directly out of my bank account, and I'm Zelling it to I'm putting it into your account. So what Zelle says they do is they say that they only inform the parties that a transaction has taken place, that they are not actually processing it. Whereas when you have someone like Square and Cash App and PayPal, they actually process the payments. They process the payments and then they send it to you. Zelle doesn't do that. They don't process the payment. Your bank processes the payment. So they're saying that they're just like a messenger in between. So therefore, they are saying that they're exempt from this. Now, whether that's true or not, it makes sense. But one thing I do know is that sometimes when the IRS comes out with new rules or new laws, they don't necessarily see everything, right? So then what happens is once the law is in place, they start to go in and they make adjustments. They go in and they change things and say, okay, well, yeah, we see why you said that there's a loophole for you, Zelle. However, no, we want you to do the same thing. So in my opinion, what I'm doing and telling my clients to do is just record everything. Just keep track of everything. That being said, I do have a spreadsheet that I created. And if anyone is interested, let me show you the spreadsheet first. And if you're interested, I can just send it to you as part of being on this webinar. I'll just send you a link to access it. And if I can figure out how to, let's see, maybe if I click on stop sharing, because what I want to do is I would like to change screens. And let me see, screen, there you go. Here it is. All right, it's right here. So let's change it. So if you can see my screen, can you please just put a 2 in the chat box? If you can see my screen. I know there's some sort of delay, so I have to sit here and wait for you guys to put a 2 in the chat box. So if you can see my screen, put a 2 in the chat box. Okay, good. Okay. All right, so here is something that I created. Now, normally I create my spreadsheets in Excel, but I wanted to make Carla said 2-2. That means she could really see. I like to create my spreadsheets inside of Excel, but just for ease of sharing, I decided to create it in here, Google Map, not Google Map, sorry, inside of Google. So basically, what I've created a tracker. It's really simple, and you may or may not need it. You know, you may not have use for it, but for those of you that may have use for it, here is what it is. Okay, so I've created something that has the date. So let's say you go out with somebody a particular day. You want to go ahead and you want to include the date of whatever the date the transaction occurred, right? So you're going to right click with your mouse twice, and you're going to choose the date. So we'll choose the 28th, right? Now, was this a Cash App? Was it Venmo? Was it PayPal? What was it? Well, you can click on this little down arrow, and let's just say it was a Venmo payment. You're going to click on, so you have an option to click either Cash, Venmo, PayPal, or Zelle. So we're going to click Venmo. Who did you send it to? Well, we sent it to let's just say Miss Smith. And how much was this for? How much did you send her, or how much did you receive? So it's coming or going, okay? Because really the person that receives the money is the person who is going to also receive the 1099K, okay? So if you're receiving the money from someone and that is not income, you want to notate, okay, on this date, Venmo processed from Miss Smith $100, right? And this $100 was for the sale of purse. Now, keep in mind that when you sell stuff, okay, you might use Cash App, you might use Venmo, you might use PayPal when you sell your personal items. When you sell your personal items, that is not taxable, okay? And it's not taxable because you might, more than likely, when you're selling something used, you're selling it for less than what you purchased it for. If you sell it for more than what you purchased it for, then it becomes taxable. But in that case, that's not usually the case. Usually we're selling stuff that we don't want anymore. We're cleaning out our closets, and we're like, okay, well, clean out my closet and I'm selling ABC. Not like you're on Poshmark or something, but let's just say, well, even then, because if I'm doing your taxes and you're on Poshmark and you're selling something that a used item that you owned, and you're selling it for less than what you purchased it for, well, that isn't really it's not really taxable. So anyway, so let's say you sold a purse and you purchased the purse for $100 and you wanted to get rid of it, cleaning out your closet, and you sell it for $50. Okay, well, that's not taxable, right? So let's assume that happened. You sold a purse for $100 that you paid $200 for. It's not taxable. Then what you want to do is you want to include the receipt that you either sent out, or whatever came in, whatever sort of documentation you have showing that $100, right? Showing the $100, and then also showing what the transaction was for. In this case, what I did was, for this particular transaction, the Cash App to Miss Tina, I attached the supporting document. When you attach the supporting document and you just hover over it, you'll see, oh, okay, we went out to dinner. It was a reimbursement for a meal, $16.20. So you can see it right there. If you have to download it, you can download it. The key is you want to keep everything in one place. Now, in order to be able to do this, you want to right click the mouse and then click on insert link. You're going to include the link right here, and then you're going to just say what it is. Receipt for sale of purse, or invoice that I sent out for the sale of the purse, or after you sold the purse, after you received the money from Cash App, you receive some sort of, I don't know, invoice or whatever they send you after you purchase something or sell something. You're going to include that here, so you have access to it. Now, in order for you to create a link, those receipts have to be in the cloud. I keep my stuff in Google, so I can just go get the link from where it is. If it's a Google Doc, I'll go get a link from there. Then I'll just copy and paste the link here. If it's in Dropbox, go get the link from Dropbox, throw the link in here. If wherever the link is, go find the link on the web, add the link here, click apply, and then whatever the supporting documentation description is, add it here, and then you'll have access to it at all times. So now what you can do is you can see all of the transactions that you have processed through whomever. So let's just say we have Cash App here, we've got Cash App here, we have Cash App here, we have Venmo here, we got Venmo here, we have Venmo here, and let's just throw PayPal in there just for the heck of it. We've got PayPal, and PayPal. All right, so then we are going to just drag this down. Let's just drag this down. All right, so now we want to know, all right, so we have all of these transactions. How do I know which one is Cash App? How do I know which one is Venmo? How do I sort this? So the way that you will sort this is you highlight column B, click on data, click on filter view, and say create new filter view. So you've created a new filter view. Now we want to filter this by, all we want to see are Cash App transactions. So click on this little doohickey right here. And then you want to unclick this, unclick this, unclick this, click OK. Now you see only Cash App. And you want to see how much was received. Well, you can just go in here and drag down and look at the bottom right-hand corner and see it's $316.20. And you'll have access to the receipts here. That's a quick way to try to figure out, well, how much did I get from Cash App? How much did I get from Venmo, PayPal, so on and so forth. So that's how this thing works, a little tracker. It's really simple, no big deal. So for us to take the filter away, go here, click on data, and then say you want to delete all filters, and then we're back to normal. Okay, so that is how you use the tracker app. So I'm going to stop sharing my screen, and let's say okay. And I want to get my slides back. Let me see if I can figure out how to do that real quick. Let's see. Slides, open. Okay. All right. So if you would like a copy of this, can you just type 1 in the, not 1, sorry, type 3 in the chat box. That way I can send you a copy, and I'll just take your name down. That way I don't send it to people that are not interested or that don't want it. Or I might just send it to all of you, make things easy, since I like to normally give people something when they attend my webinars. So I'll probably just send it to everyone. Okay, Ruan. Okay, cool. All right, so let's move on. Let's see. Okay, let's go ahead and go over here. All right, so let's talk about worker misclassification. All right, so worker misclassification is huge. Like I said, in our industry, it's a big thing. So I don't want to go digging deep into it, right? But let me just say that when it comes to worker misclassification, you can be audited by the IRS. You can be audited by the state, as in I'm in Georgia, so we will just say Georgia State. You can be audited by the payroll, by a payroll company. You can be audited by unemployment the unemployment department. You can be audited by your insurance carrier. Let's say you have workers' compensation. I actually did an audit, or rather represented a client in an audit not too long ago. It was one of my clients in New York who was being audited by the workers' compensation insurance that he has. You can be audited by them. So there are several people that can audit you, and all those folks that can audit you normally have some sort of interest in payroll, in the money, the taxes that I gained from that. So it's not just the IRS, it's not just the states. Okay, there are other outside agencies that can also audit you. So misclassification, there are three things that you want to take into consideration when you are determining if somebody is being misclassified, or rather, not you. Well, I would say you, because this is what the IRS and unemployment and states and also the insurance companies, this is what they look at. They look at behavioral control, financial control, and then they also look at, what's the other one? I always forget. Let me go down. They also look at relationship between the salon and the worker, right? So let's start out with behavior. So what is that? Okay, so a person is most likely an independent contractor if the salon gives them no instructions. In other words, you just come in here and rent a chair and that's it. The only thing you're going to tell them is, okay, here are our parameters. You can't just have someone come into your salon and do anything they want, right? Even if they are independent contractors. You're going to have some parameters. Like, for example, we shut the doors at 9 o'clock. That's just the time that the salon closes. So everything that you do needs to be done within those hours. You can't just come in there and then cause havoc in someone's business. So there are certain rules that you're going to have to abide by, but those rules are rules that make sense, not rules where they're trying to control you. Okay, it's just rules that keeps the peace within the place of employment, right? If you don't receive any training, okay, so once you start training your workers, you might think they're booth renters, but if you start training them and you're being audited and this happens to come up, guess what? They're going to look at you and say, this sounds more like an employee-employer relationship to me, right? But it's never just one of these things that will cause a problem. Let's just say you provide training, right? And to a booth renter, but that's all you do. And there's nothing else in this list or whatever other lists they have, because there's like 20 or so different things that they look at. And it's just that one. They may not say, okay, bam, you're an employee, so therefore we're going to recategorize this. It may not necessarily be that may not necessarily be the case, right? But just keep in mind that these are some of the things that are being looked at. Okay, as an employee, you're going to give them instructions on how to do their job and just how to do the work. And also, if you give detailed training, well, that's more likely an employee. Financial control, okay? So most likely classified as an independent contractor if they have a significant investment in equipment and tools. So when I was a booth renter, I had all my own equipment. Now, no one is saying that you need to carry an entire hair dryer, sit down hair dryer, or an entire steamer of your own. Even though I had my own steamer when I was booth renting at this one salon, I had my own steamer because I just wanted to, right? But I wasn't going to bring a whole sit down hair dryer into the place. No, I wasn't going to do that. So just based on the nature of our business, that's not something that they will take into consideration. Okay, so you pay business or travel expenses themselves. So they're paying their own business and travel expenses. You're not saying, oh, come on, guys, let's go to ABC town to go to a hair show. And by the way, I'm paying for everyone because you guys work for me. No, if you do that, it's starting to teeter onto employee territory. They're allowed to service whoever they want. They can service whoever they want. They put their ads out there and say, come one, come all. This is what I do. I'm servicing you. When I'm done servicing you, you're paying me. That's more likely an independent contractor. If it is a salon owner, or rather an employee, then more than likely that's not going to happen. The salon is going to provide the client, or rather provide the worker with customers for the most part, right? Some people require that employees also get up and try to get their own clients. Okay, that happens too. Okay, usually a contractor is paid by the job. So when someone comes in to get their hair done, they get their hair done and they get paid by the job. An employee is normally paid commission, or paid hourly plus commission, or paid hourly. Once you start including commission as part of this whole thing, I know some salons say, okay, well, you're a booth renter, you're an independent contractor, but by the way, you're on commission. Commission, that means you are an employee, because the salon owner has total control over your finances. Then that is one of the ones that, if it was the only thing, the only infraction that was found, where they will say, this is going to have to be an employee, because the financial control is huge. So if a person is on commission, they are an employee. Period. The end. No way around it. No ifs, ands, or buts about it. Also, let's see. They have an opportunity for profit or loss. Usually, if you are a business owner, you're either going to make a profit or you're going to have a loss. It's one or the other. Usually, as an employee, that doesn't happen, because if you're on commission, you only get paid if you do something. So you get 50% of what walks in the door. 50% of zero is zero. 50% of, and then when it comes to, if you're on a minimum wage or plus commission, or if you're on wages, salary, then you're going to get paid. You're never going to lose. You're always going to make money. So there is no opportunity as an employee to have a net loss. That you're not going to file your tax return and say, oh, by the way, I had a $15,000 loss this year. No, an employee, independent contractor, that can happen. If you're on commission or you are on your wages, that's not going to happen. So that's something that they look at as well. And then the final one is the relationship between the salon and the worker. Now, this one can get really tricky, especially for people that live in California, and I think Chicago as well, and for certain other states. Okay, there are certain things in here that can get really, really tricky where there is no way out of it. Okay, but let's talk about, first and foremost, independent contractors do not receive benefits, no sort of benefits, health benefits, nothing. They don't receive benefits. Once you start giving them benefits, they're an employee automatically. An independent contractor should sign a contract. And I tell my clients all the time I'm not an attorney, so I would say that I can't give you legal advice, right? But I can just give you advice based upon what I have seen as a CPA and what I have seen as a former auditor, what I used to do as a former auditor. This is what I used to do as a former auditor. What was I looking for, which is important, because if me as a CPA now, when I confront a state auditor, right, I need to know how they're thinking, so that way I can prepare my client. Well, I used to be an auditor, right? So I know how I thought. So I combined what I thought with what I know now as a CPA, and I combine the two and try to represent my clients or advise you properly. A signed contract is important. That's because with a signed contract, you are clearly stating, you're clearly defining the separation between you and the salon owner, right? But now keep in mind that a signed contract, just because you sign a contract, doesn't necessarily mean that it's a done deal, because the contract still has to be legal in the eyes of the law, right? So what does that mean? That means that the contract, you need to have an attorney review it to make sure that it's legal for your state. All states are different. Because if you just have someone sign a contract because it's what you feel you want to put in there, then it may not hold up in court, or it may not hold up if you're being audited, because it's like, well, this doesn't really make any sense, right? So you want to make sure somebody with a legal background looks over it. Okay. Also, as an independent contractor, they can't quit, or nor can they be fired at will. At will meaning that I'm just going to quit. As an employee, you can quit. I quit. I don't want to work here anymore. I quit. As an employee, you can fire. As an employer, you can fire your worker, your employee. States are different. You have some at-will states. So depending upon what state you are, you may be able to fire an employee, but then there are certain things you have to keep in mind. But as an independent contractor, you can't quit or be fired at will. Why? Because you have a contract. So if you just decide, I'm walking away, okay, what about that contract you signed for a year? I tied up this whole booth for you for a year, and that's part of my yearly plan. Part of my budget is that I'm renting this booth out, and I'm going to receive $300 every week for this booth, and now you want to walk away and put me in a position where now I have to go look for someone to cover the year that you were working, that you were supposed to work. That could be a problem, okay? And then if you try to tell the person to leave, get out of my salon, you're fired. Well, there's a contract. She has a contract. What is she supposed to just somehow leave? What about her clients? She can't just leave, because when her clients are looking for her, how are they going to find her? You're upsetting her financial situation. So then that could be another lawsuit, right? So that means that as an independent contractor, that contract ties you both to certain requirements where you can't just arbitrarily walk away as the booth renter, and you can't just arbitrarily fire a booth renter because you felt like it, right? Now, this one is really tricky. The last one, it's really tricky. And this one is the independent contractor. They perform services that are not part of the salon's regular business activities. This is one of those ones. This is the one that was causing so much havoc a few years ago when California decided to change how it handles independent contractors. What this one means is, as an accountant, if you hire me as an independent contractor and I decide that I want to set up shop inside of your salon and just create an office in the back just for ease of whatever, like maybe I need to make people count inventory, or I need to just be there to see what's going on and how the operations are running. Well, the service that I provide is not part of what the salon offers. So because of that, I will be looked at favorably as an independent contractor. But if you are offering a service that the salon offers, then automatically you are not an independent contractor. So that means that if you're hiring a booth renter to come in and do hair, but you're a hair salon, what does that mean? That means that they can't be an independent contractor, because the services they offer is the same as what the salon itself offers. So there are some states that do implement this particular requirement. I know California was going to, but then they didn't. I just don't know. I don't really know what happened with that. But this one to me is just really stringent. It's really too stringent, because with this particular law, that would mean that you can't have any booth renters. So if you ever wanted to stop booth renting in any state, implement this law. Not only implement it, but actually make sure that people are abiding by it, because it's part of the law. But is it implemented, right? If they decided to implement this, it's bye-bye to booth renters. Hopefully that doesn't happen. Okay. All right. So let's see. Next will be, I think we're almost done here. Okay. So who should give and receive a 1099? Salon owners should receive a 1099 NEC from their booth renters. So if you're a booth renter and you pay your salon owner more than $600, then you need to give them a 1099, period, the end. If they say to you, oh, I've never received one before, why are you giving me one now? Well, just because you haven't received one before doesn't mean you shouldn't have been receiving one. And the booth renter may be trying to abide by the laws, because if she should ever get in trouble for not giving you a 1099, she's the person who didn't give the 1099. You are the one that is going to be fined and get into trouble, not the salon owner, but you. Because the salon owner, she may still report the income. She may not, but if she doesn't, that puts her in a precarious position. If she does, then she reported the income anyway, but you didn't give her a 1099 NEC informing the IRS that you gave this person over $10,000, and therefore you are the one that's going to receive the fines. So you want to make sure that you give your salon owner a W-9 to complete. Give them a W-9, even if they say to you that, oh, I am a corporation, S corporation, therefore you're not required to give me a 1099. Okay, that's true. But you want to have it on paper, in writing, where they actually check the box. Because if for some strange reason you should get audited or get into trouble, you can say, okay, well, here's the paperwork that she checked the box and says she was an S corporation, and that is why I didn't give her a 1099, to make sure that happens. Also, if you pay your salon owner with a credit card, then you're not really required to give them a 1099. Okay. Also, if you pay them through PayPal, because PayPal normally gives that 1099K reporting everything that the salon owner received. So therefore, you're not really required to give them a 1099. So it's situations where it's not required. But if you're paying them a check, or you're transferring funds, or you're paying them through QuickBooks, a QuickBooks invoice that they receive every single month, every single week that you have to pay, and you pay them with cash, or then in that case you need to give them a 1099. Suite renters should give a 1099 miscellaneous or a 1099 NEC to their landlord. This one is going to depend. Okay, so who are you paying the money to? Are you paying it to a salon suite owner who also works in there? Or are you paying it to a landlord who you send the money to every week or every month, or they debit your account every month? Do they get an MICS or a NEC? That depends. I would say that you would need to contact your accountant to find out what they get. Because with me, I've had a few clients that have paid salon owners that have actually paid rent to their landlords, and I've had to contact the landlord to ask a few questions. The questions that I ask the landlord would determine whether or not my client is required to give them a 1099 MI miscellaneous or a 1099 NEC. In most cases, I've found that with a person that owns a salon, a whole salon, and even a salon suite, sometimes it tends to be a 1099 miscellaneous and not necessarily a 1099 NEC. But you need to sort of figure out which one, because the treatment is completely different for tax purposes. For a 1099 NEC, they're going to be paying way more taxes than they would if it was a 1099 miscellaneous, because of the type of income that it is. And then booth renters should give a 1099 NEC. I think I already said that, right? To the salon owner. Oh yeah, so the booth renter should give a 1099 NEC to their salon, to the salon owner. That definitely is required. Okay. Now, finally, let's talk about, so I want to give some time for questions. Let's talk about the type of tax returns that you should be filing. Okay, so you're a business owner, you're a sole proprietor, or you are a single member LLC. You file a 1040, that is your personal return, and then and then your business, your Schedule C, goes on a Schedule C. So all of your business income and expenses goes on a Schedule C. That Schedule C is attached to your 1040, which is your personal return. I hear people saying, "Oh, I'm a single member LLC, and I filed my personal taxes last year, but I didn't file my business taxes." Well, automatically, if that happens, when I hear that, that tells me you need to do an amendment immediately, because you filed everything wrong. Because if you didn't include your business income and expenses on Schedule C, part of your 1040, and you are a sole proprietor or a single member LLC, that means that you didn't report your income properly. You're going to have to amend your tax return and include your profit and loss, or not profit and loss, include your income and expenses on your Schedule C, right? Now, business tax returns. If you are a partnership or a multi-member LLC, which means you're an LLC with more than one member, you are an 1120S. You are taxed. So 1120S means that that's a tax election. You are taxed as a corporation, meaning that if you are a multi-member LLC, or if you are a single member LLC, you can elect to be, or if you're a partnership, or if you are just a regular corporation who will file an 1120, all of you can all elect to be taxed as an S corporation. So an S corporation is not an entity type, it is a tax election. So everything you see up here, 1040, Schedule C. Now, if you're a sole proprietor, you can't elect to be taxed as an S corporation. You have to first, well, at least not now. That could change in some years. You have to first of all register your business with the state as a single member LLC, and then turn around and elect to be taxed as an S corporation. So if you are a single member LLC, multi-member LLC, partnership, regular corporation, you can all elect to be taxed as an S corporation. Okay, so business tax returns, 1065 if you are a multi-member LLC or a partnership. If you're an 1120, which is a corporation, you file a regular 1120. If you have elected to be taxed as an S corporation, then you file an 1120S. In addition to that, you're also going to file your personal return, which is your 1040, right? If you come to me and you say, Desiree, I filed my personal return in 2020 and I sent it to the IRS. However, I have not filed my 1065 or my 1120S for 2020. And that, once again, time for an amendment, because 1065, 1120S, you're going to get something called a K1. Okay, the K1 shows all of your income, all of the income that you need to report from your business onto your personal return. So whereas if you're a sole proprietor or a single member LLC, where the 1040 and the Schedule C are in the same, are one, basically, you file everything at the same time, right? And you show your income and expenses on that Schedule C as a 1065 or 1120S, you get a K1. Once that return has been filed, your accountant gives you a K1. You take that K1, give it to your accountant, and they will file your personal return with the K1 showing all of your income and expenses. Okay, so they go hand in hand. The difference is with a 1040, you're just paying for one tax return. Whereas if you have a business, you're paying for the 1065 to be filed and you're paying for your 1040 to be filed. So it does become a little bit more expensive. Okay, so another thing that people aren't really aware of is business personal property tax return. Here I said check with your state, but in all actuality, it's not the state. You're going to check with your county. Check with your county. For example, I'm in DeKalb County, so I would need to know whether or not I'm required to file a business personal property tax return. Personal property doesn't mean personal property as in, oh, these glasses, this is my personal property. Yes, it is, but that's not what we're talking about. Personal property or real property, right? So personal property, real property is real estate. Personal property is pretty much everything else. So you have all of your equipment in the salon, the blow dryers, your steamers, your sit down dryers, whatever else. That's what's considered personal property. But you want to check with your state to find out at what level are you required to file that, not state, county. At what level are you required to file a personal property tax return? I think in DeKalb County or Georgia or something, I think it's like over, if your property is under $7,500, I believe it is, you're not required to file this return. But if you own property over $7,500, I think you are required to file this return. Every state's different. Check with your state. Okay, payroll tax return. Okay, so if you are a 1065, which is a multi-member LLC or a partnership, or if you are a 1040, which is Schedule C, you are not allowed to be on payroll, period. I know people, they go on payroll. It's not allowed. You're not allowed to be on payroll. As an 1120S, or if you have a regular corporation, you are required to be on payroll. You must, by law, be on payroll. You don't have an option to say, oh, you know what? I'm not going to be on payroll. That's what got a lot of people not receiving the PPP loan a couple of years ago, because they weren't doing things right. And when they realized, when they tried to get the loan and they were asked for all of their payroll details because they were an 1120S, or because they were taxed as a corporation, they didn't have it. So they couldn't get the loan. Okay. And then you had some Schedule Cs who were paying themselves as employees and they couldn't get it because it was crazy. So as if you're taxed as an 1120, as an S corporation, you are required to be on payroll, which means that in addition to filing your business tax return and your personal tax return, which is a 1040, you're also required to file payroll tax returns every quarter. 941s need to be filed either every quarter, depending upon the state you're in and what the limits are. Because if you have to turn over a certain amount of money, depending upon what it is, you may be required to file on a monthly basis, or on a quarterly basis, or on a yearly basis. It all depends upon what your payroll taxes are the prior year. First of all, you normally start out every quarter. Usually they'll start you out every quarter. And then you will receive a letter from them saying, okay, based upon how much money you made in 2020, whatever, we have determined that you can file your payroll taxes on a yearly basis, or we have determined that you now have to file on a monthly basis. That's what happened to one of my clients recently, where they were, not recently, but I guess about 2 years ago, where we were first of all filing it every quarter, but because of how much money they were making, the state required us to file it every month. So they do it every month now. And then finally, sales tax return. If you sell products or you collect sales tax, I know every state's different. Some states you have to pay sales tax on services, like New York. You pay sales tax on services as well as products. Here in Georgia, you only pay sales tax on products. So if you sell products, or if you're in a state where you're required to collect sales tax for products and services, you want to make sure that you are also filing a sales tax return. Once again, with the sales tax return, and you know what? Let me reverse what I said. For the payroll tax return, I was thinking sales tax in my head. The payroll tax return, you are required to file every quarter. I'm sorry, every quarter, not every year. That's every quarter. What you file yearly is the 940. The 940, you file that every year. The 941s every quarter, right? Sorry about that. And then also with your state, you're required to file on that same, well, depending upon the state, but I know for most of the states that I work with, we're also required to file quarterly payroll taxes on a quarterly basis. And then there's also one return that we file on a yearly basis. So for payroll tax, that's every quarter for the 941s and for your state. And then at the end of the year, the 940, you have to file your 940 one time. And then depending upon what state you are, there's also a state return you have to file once a year at the end of the year. Sales tax is where I meant to say it's either monthly, quarterly, or yearly, depending upon how much money you are collecting on behalf of the state. It could be, and that's my client. As a matter of fact, my client went from quarterly to monthly because of how much they were bringing in. So the more money you make, they're going to require you to do it monthly. And the reason is because they figure, well, if you're bringing in all this money, we don't want to take any chances where, give you entire 3 months and then you don't have the money to send us. So then they switch you from quarterly to monthly. If you're bringing in such a small amount, they don't want to burden you with having to file quarterly or monthly tax returns. So they say, okay, based upon how little you're bringing in, we're going to go ahead and just switch you to yearly. Okay. So let's see here. All right. So I think that's it. Yep, that's it. So are there any questions? I know this went on a little bit longer than I expected, but are there any questions? So I know there's a time delay, so I'll just hold out here to see if anybody asks any questions. And I'd like to thank you guys for showing up, actually. I really appreciate it. And while I wait for questions, next week, I'm going to be talking about, because this is a 4-week boot camp. So the first one was last week. This one, we have 2 more. And we are going to be talking about, let me get my list of what we're going to be talking about next week. That way, if you're interested, you can sign up. And what I'll do is I'll probably send another sign up sheet, but you can actually sign up with the same landing page that you signed up with this time. So I think I have all 3 quarters, or rather all 3 sessions on there. All right. So next week we are going to be talking about, let's see. Okay. Bookkeeping 101 for beauty entrepreneurs. And this is so important. I mean, because if you're not maintaining your books and you're just winging it, honestly, you might be making money, but if your goal is to try to grow your business, right? If you really want to grow your business, you have got to know what your numbers are saying. There's just no way you can grow your business without that. I'm not saying you can't run a business. I mean, I don't see how you can run a business without it, because for me personally, hold on a second. For me personally, if I do my bookkeeping every month, right? I couldn't even imagine not doing it, because there are things that I need to do, things that I'm planning. I have my budgets and all of that. If I don't know how much money, did I meet my budget? Was I under? Was I over? If I was over, I can take some of that money and invest it back in my business, so that way I can start to see returns on that. You can't do that if you don't have numbers. You just cannot do it if you don't have numbers. So it's so important that you maintain your books. I mean, I can't emphasize this enough. It's so important. And that way you can, how much are your estimated taxes? How are you going to know this if you don't have books? How much are you put towards savings? How are you going to know this if you have no books? How much should I put in my retirement account? How do you know this with no books? How much should I draw out of my business for my own personal, expenses? How do you know that with no books? You're just guessing or pulling stuff out. And yes, you may have enough money in your account to do that, but you can't plan, you can't grow. In order for you to grow your business, if that's your goal, if your goal is to grow your business into a 6-figure business or even a 7-figure business, you have to have a plan, a roadmap, and you have to follow that roadmap. Every single thing that you do, every decision that you make has to put you in a position to meet your end goal. And you cannot do that without books. You just can't. There's just no way. Okay. So we're going to talk about bookkeeping 101, talk about QuickBooks Online, QuickBooks Self-Employed, which one should you be using, why I think QuickBooks Self-Employed may not be the best choice depending upon what you're doing. We're going to talk about, let's see, I think that's all we're talking about next week is bookkeeping. Then, I think I'm going to have some spreadsheets that I'll give you for those of you that aren't ready to commit to purchasing QuickBooks. I think I have some spreadsheets that I can give you that will help you at least get started. So that will be for next week. And I'll show you how to use it and all of that. So that's going to be so next week we're going to do more of a hands-on in a way. I think I want to get into QuickBooks, get into the file so I can show you certain things. And also with the spreadsheet, I want to show you how you can use that to make decisions if you so desire. So we'll talk about that next week. And then part 4, which is going to be on March 14th, we'll be talking about, let's see, basically, I just asked the question. Here's what I said. Do you know how much money you're missing out on just because you're not doing 3 simple things, right? So you'll find out what those 3 simple things are. And we'll be talking about these things are simple enough where if you implement them, you can see a change in your business, right? And they're really small, but sometimes seeing a change doesn't require this huge monumental shift. Sometimes it's the easiest things that give you the results that you're looking for. Small by small, or not small by small, that's wrong English. Little by little, you're just chipping away at your goal, where you're trying to get. And then I think on the final day, I said, what is the best method to determine how much I should be charging for a service? So that tends to be a problem with service providers. We don't really know sometimes how much we should be charging, because are we thinking we should be pulling out of our heads? Are we basing it on what my friend told me, what my friend is charging? Are we basing it upon what we saw on social media? What should I charge for my service? Well, there's a framework that I believe and that I use when it comes to charging. Stay within this framework, because if you stay within this framework, you can scale. You can scale up. If you just pull it out of your head, then you can't scale from that, because there is nothing to go back and analyze. Okay, so that's what's left for part 3 and also for part 4. So hopefully you guys show up. Let's see, Rhonda. Hey, Rhonda, how are you? Oh my God, it's been a while. Okay, so Rhonda said, if you pay booth rent by Cash App, Do you still need to? Yes. Oh, hold on. No, because now that Cash App is required to provide the 1099Ks, then they are actually reporting what is being received. So let's say, Rhonda, I'm working at your salon and I'm paying you $600 every, well, let's just say I'm paying you $1,200 a month, but I'm paying you through Cash App. Well, prior to 2022's tax season, yeah, I was required to give you a 1099 NEC. Now that Cash App is required to provide you with a 1099K, that means that your booth renters aren't really required to give you a 1099 NEC. And another reason why you need to keep books, guys, is because, first of all, when you receive that 1099K from whoever, it's going to include the total amount of money that you received. They're not going to make any adjustments. In other words, you're paying fees, right? You're paying fees, but they don't back out the fees. They just give you the total. So you need to know how much you paid in fees, so that way when you are doing your taxes, you're not also paying tax on fees, because if you already paid fees, that's a deduction to you, right? It's a deduction to you. So you need to keep track of it. And you can only keep track of it if you're maintaining your books. Otherwise, you don't know. You can look at your bank statement all you want and say, well, let me see what happened. Look at my bank statement. Bank statement is not telling you much. You need a bookkeeping system. I can't emphasize this enough. So yeah, Rhonda, I answered your question. And then she said to salon owner. Okay, I think I answered that. Angie said, Angela, I don't use desktop. I used to use the desktop, but I don't anymore. It's too cumbersome. And most of my clients are out of state. You're out of state. Most of my clients are out of state. And it's so much easier for me to access their books using access their books on the cloud. With a desktop, there's too much back and forth with the files. And then every time you change something on your end, or I change something on my end, we have to make sure that we somehow sync it. And if we don't sync it, then there's a problem, because there's going to be missing data. So it's just too much, and I prefer not to deal with it. So I just deal with the QuickBooks Online. That's what I like to use. And for most beauty pros, QuickBooks Online, you can go with the the Essentials version, which I believe is like, I don't know, $40 a month or something like that. They have different versions, and you have the Simple Start, which is $25. I think you have the online version, the Essentials, which is $40. Then you have, for $80, you have the Plus, and then Advanced is like $150. I actually have a whole complete course on QuickBooks Online. It's like hours and hours of tape on QuickBooks Online that helps beauty pros do their own bookkeeping. But next week, what we're going to talk about is we'll talk about which one works for you and why. So we'll be looking at it, and I'll say, okay, well, here's what works for you based on ABC. A lot of you can get away with Simple Start as well. Now, I used to advise that you get Plus, because there's something in Plus called classes, right? If you have different sources of income, which most of us have nowadays, you want to break that out. And we'll talk about that next week. You want to break that income out, because you want to know exactly what you're bringing in and what your expenses are. But each source of income is extremely important. But now QuickBooks has come up with this thing called tags, where with tags, it's a workaround. We can use that instead of using classes, which means you no longer have to pay $80. You can pay $25 a month. But we'll talk about that next week. Okay, and then Rhonda said, that's right. I did read that. Okay. And then Wanda said, oh, whoa, I haven't been doing that. What haven't you been doing, Rhonda? What haven't you been doing? So let me know that. And then once she tells me what she hasn't been doing, I'm going to close this out, because I know you guys are probably sleepy. I know I am. I got to go back and do some more tax returns. It's tax season, so I'm slaving away. So I have a couple more hours for the day before I actually call it a night. But yeah, I really appreciate those of you that showed up, and I'm going to be sending out a link to that little tracker to everyone, because I was looking in the comments and I see some people included. Well, I guess not everyone wants it, but guess what? You're going to get it anyway. You don't have to download it if you don't want to, but it's just make it easier for me to, rather than going through the comments and seeing who typed in a 3. It's easier if I just send it to everyone. Separating your fees. Okay, yeah, you definitely want to do that, because those fees are no joke. Those fees are no joke. When I look at my fees for Square, I say to myself, okay, not Square, sorry. I use Stripe, and even Square. I use Square a little bit, but I use Stripe more than anything. And boy, and I also have another system that I use. And man, those fees, oh my God. And the more you collect, the higher it is. And I really get to see what I'm paying in fees. 1, when I have a high ticket item, or 2, when I just go into my software and just click and see, okay, look, what have I paid so far in fees? And man, I say to myself, I'm in the wrong business. I should go figure out how me too can do this, because those fees are a killer. So yeah, Rhonda, you want to absolutely make sure that you are separating your fees. What I would do if I were you, depending upon how significant those fees are, if you feel as though including those fees will either reduce your tax liability, where you either get a refund or pay less in taxes from prior years, only up to 3 years behind, 3 years back, because you can only go back 3 years if you're going to amend. You can amend your tax returns, but only if it's worth it. It's no point paying someone to amend your returns if the fee to amend it is more than what you're getting back. Or if you do your own tax return, then if it's not worth your time, don't bother. Just moving forward, you make sure you separate those fees. Okay. All right. So Sharice, what if you don't pay them? Pass it off to the client. That is possible. I actually have, I use Square, and I don't think Square gives you that option, but there's another payment system that I use where I can actually pass my fees off to my clients. I don't do that only because I just think that it's the cost of doing business. It's something that can be done, and it's really up to you, whatever you want to do. And there's nothing wrong with doing it. The reason I don't do it is because I just feel as though it's the cost of doing business. Okay, it's the cost of doing business, therefore I'm okay with it. But yeah, so that's how I see it. So I used to pay them, but now it's a convenience fee on the client's part. Yeah, I mean, there are people that I pay those convenience fees. There are people that charge me those convenience fees. But honestly, when I see that, I get a little perturbed. I'm like, I hate paying convenience fees. That's the cost of doing business. But I understand, because it's expensive. It's not cheap. 1 or 2 fees, okay, not bad. But when those things start to add up, they do start to add up. So yeah, there is no I don't have a problem with it. I think that if you want to pass those convenience fees on, have at it. Yeah, I don't have a problem with that. I use Square, and I notify them. It's okay, that's a 2.7% fee if they choose to pay. Okay, yeah, because you're giving them an option. See, with Square, and then also with this other company that I use, you can give them an option to say, okay, here's the fee, or pay me this way. They get to choose. You're giving them a choice. At this point, it's up to you. If you want to pay 2.75, you go ahead. If you don't want to pay that, and then pay me in a different way. So yeah, that's not bad at all. Okay, thank you. Cost of doing business. Okay. Cash is king. Yep, sure is. All right. So if there are no other questions, I am going to sign out. And I think that you will be getting a copy of this. So if you need to instructions, for those of you that want to get the spreadsheet, you might want to get instructions on how to use it again. You can go back and watch this webinar and figure out how to use it. All right, so you see, Juan, I've learned a lot. Oh, you're welcome, Juan. You're so welcome. All right, so I think that's it. Next week, I'm trying to figure out what I'm going to give you guys next. Oh, next week is going to be, I'm going to give you guys a spreadsheet. A really good one, too. I actually have one that you can actually track inventory on there. It's really good. but it's a little, I don't know if it's too complicated. And I'm not sure if I created a video on how to use it, because if I did, I will probably just give you the video and the spreadsheet as well. Or I may give you my more simplified spreadsheet. I don't know. I have to think about it. And then on let's see, part 4, I have to figure out what I'm going to give you guys for attending the webinar. I'm not sure yet, but I'll figure it out. All right. You're welcome, Cherise. And then Rhonda says, can you send me the... Okay, Rhonda, I think I'll send you a link to the landing page for the first webinar. And I think that, or you know what, I'll just send it to you. Yeah, I'll figure out how to get it to you for the first one. No problem. Harriet, you are most welcome. No problem. All right, guys. And also, if you can guys also go to my YouTube channel, Profit and Beauty, and you can subscribe to my YouTube channel, because my goal is to try to put something up every week right now. So if I can put up maybe a video every week, just sort of helping you guys out, with the questions that I receive, I try to put up a video every week, and that's my goal. So if you subscribe to my YouTube channel, you could probably get some good information, and also subscribe to my Instagram. I'm always putting up tons and tons of, as a matter of fact, I think for a whole 30 days I think it was 2 months ago, every day I put something on I posted something on Instagram that had to do with our industry. Very valuable information. So I suggest you hop over to Profit and Beauty and what's the word? Not subscribe. Is it like my page? I'm confused. I don't know. Anyway, whatever you have to do to be able to look at my posts, because there are some really good posts on there that I think will be very, very helpful to you guys. All right, you guys, thank you so much for being here today. And I am going to sign off once I figure out how to do it. Okay, here you go. Exit webinar. Bye.